Now we get to a less complex and filled up slide. These are the standards for tax preparation. So we see these are 3 standards, 3 levels of assurance, you could kind of call them. And then we discuss the difference between ordinary negligence and fraud. Now let's talk about it. As a tax preparer, you could have an idea, and it could fall into 3 different categories. So you could say, is it more likely than not? Well, if you are telling someone that they should take a deduction that you know every single person takes and that you're pretty sure about it, well, that would be a tax position with a greater than 50% chance of being upheld, indicating that it's a reasonable position to take. So, for example, if you have a client who is running a business and they're deducting cost of goods sold, yeah, that's pretty straightforward. You're going to want to deduct cost of goods sold from your business. So, and then you also do research and you see that many other people are doing that, and you see in periodicals that they're talking about that. You look in the IRC and you see that it says, yes, you should take cost of goods sold as a deduction. So that would be very much a more likely than not standard. Now, it's not going to be your job on the exam to look through different possibilities and assign a percentage to them. You just need to know the differences here. Now, if the reasonable basis is greater than 20%, that is going to be the minimum threshold to avoid certain penalties. That's a reasonable basis. And again, you're not going to have to determine, oh, this transaction would likely fall under the 20% or above the 20%. But it's just something to be familiar with. So if it's determined that there is a 25% chance that this will get past the IRS, well, that's the bare minimum, right? It's 20%, 25, that's not too far above the bare minimum. And then lastly, we've got substantial authority. This is going to be greater than 33%, but less than 50%. And this is a tax position that has a higher level of confidence than the reasonable basis, but it's not as high as the more likely than not standard. Kind of just memorizing these thresholds and understanding that there are different transactions and tax positions that could fall into each of these categories. Now, lastly, we've got ordinary negligence versus fraud. Ordinary negligence in tax return preparation, and we specify tax return preparation because we'll talk about negligence and fraud all the way down in business law. This is going to refer to unintentional errors or oversights. You do your due diligence, but we're not perfect, so we have accidents. Whereas fraud, dun dun dun, that's going to involve a willful intent to deceive or evade taxes. That's not good. Penalties for fraud are generally more severe than negligence because fraud is intentional, whereas negligence, maybe you didn't do your due diligence, but you weren't intentionally trying to commit any negative actions. All right, diving in further with negligence versus fraud for tax preparers and taxpayers. We see up here, we're dealing with the differences and examples of such for preparers, and then we got taxpayers. So we got 2 distinct concepts for preparation and filing. Negligence, that's the failure to exercise reasonable care or due diligence, whereas fraud is intentional. And remember, you have to prove that there was intention behind this harmful act. Here, we've got the differences. So for tax preparers, what would negligence constitute? That would be failure to ask pertinent questions or to gather necessary information from the taxpayer. If you've got a tax client and you know that they generally are working and they have W-2s, but you don't ask for their W-2s, and that would be negligent. You just didn't ask for the W-2, and that's not going to get reported. As such, taxes will be understated. And then also misinterpreting tax laws or overlooking deductions and credits. That is negligent. You could call it lazy, but negligence is its own word. You should know it as such. An example, a tax preparer inadvertently omits a taxpayer's eligible deductions, leading to a higher tax liability. So whether it's that the taxpayer that you're preparing for benefits or gets screwed over by your negligence, either way, it's negligence because someone's getting screwed there. It's either the IRS or it's the taxpayer, and you want to make sure at the end of the day, it needs to be correct, regardless of who it benefits. Shouldn't benefit anyone more than what is correct. Now, what about fraud? Fraud could be intentionally manipulating financial data or inflating deductions in order to reduce a client's tax liability, or preparing false tax returns with the intent to deceive the government. Don't try to deceive the government. I do not recommend doing so. An example here would be a taxpayer knowingly claiming fraudulent deductions on a tax return in order to generate a larger refund. Yeah, that's a big no-no. Next, for the taxpayer, negligence. This could be failing to maintain accurate records. We'll see this throughout the exam that you definitely need to maintain accurate records as a taxpayer, or reporting income incorrectly, overlooking, misunderstanding tax laws. You do your due diligence, but we're not perfect. We are going to make mistakes. And if there's no intent to be proved there, then yeah, it's just negligence. You accidentally transpose numbers when reporting income. You mess up the numbers. Instead of 32, you put 23. That just happens. And as such, there's an underpayment of tax liability, something simple like that. Whereas fraud, this is deliberately underreporting or omitting income to reduce the tax liability, claiming false deductions, credits, or exemptions with the intent to deceive the government. Again, just don't do that. Is it so hard, everyone? Just don't do that. Example here being a taxpayer intentionally hides a portion of their income or makes up expenses in order to claim illegitimate deductions, which results in a lower tax payment, yep, that is going to be fraud. And you're going to get slammed with penalties, those penalties with which you need to know, and we'll deal with those in due time. Don't you worry. We've mentioned some tidbits about tax return preparers, but let's talk about them a little bit more in depth. Well, they're going to be a professional who assists taxpayers in preparing and filing their tax returns for compensation. That is an important point to make sure that you know is it is for compensation. There are going to be certain criteria that must be met for a person to be considered a tax return preparer. If there are any duplicates, such as things we talked about, yeah, that's going to be important for sure. For example, you need a PTIN, a staff accountant who prepares all of the tax refund claim for a client, even though the tax return is signed by another member of the firm. They're still considered a tax return preparer. Where did all these come from? Does it sound like random pieces of information? Well, guess what? That's kind of what multiple choice questions are, right? They're just a bunch of random pieces of information trying to drill you and make sure you understand all of these components. Now, this is because they prepared a substantial portion of the tax return or claim for refund for compensation. A person who prepares the tax return of that person's employer is not considered a tax return preparer. In this situation, the individual is preparing the tax return as a part of their employment duties and not for separate compensation. So let's say you're just an accountant, normal fun accountant. You're just not fund, because that is a very common role. But you're just an accountant. You're having a good time. You're doing your job. However, if you're preparing a tax return just as a part of your job, you're salaried, you're just doing your job, that person is actually not going to be considered a tax return preparer because it's just a part of your job. Additionally, a person who provides only typing, reproduction, or other mechanical assistance in the preparation of a return or a claim for a refund is not a tax return preparer. These individuals are not engaged in the actual preparation of the tax return or claim for a refund, but they're merely providing administrative assistance. So that's an important point to keep in mind as well. And lastly, a person who provides tax assistance under the IRS established, and this is something I did in college, maybe any of you have worked in it, the VITA program, the Volunteer Income Tax Assistance, is not considered a tax return preparer. This is just a program where you're a volunteer, you're preparing tax returns for those in lower income situations. Can't say I was the most adept as a junior in college, but hey, I did my best. Can't say I was the most adept even by the senior year of college, but it took the CPA exam to really push me over the edge and understand what I was doing. Hey, that's life. I feel like I did a good enough job, though. These volunteers, they're not preparing for compensation, so they are not going to be considered tax return preparers. And as such, what's important about this, right? We talked about the legal obligations of tax return preparers. You've got a lot of duties. We'll also talk about that in later lessons, the duties and obligations you have to your clients. And if you're not a tax return preparer, in the eyes of the IRS, then there's a lot of differences. Now, are you technically preparing tax returns? Like if we just use our colloquial language and just would a normal person who's not an accountant, because accountants are not normal people, would they say you're a tax return preparer? Sure, because you're actually preparing tax returns. However, tax return preparer is a specific designation for the IRS, which comes with its own fun rules and regulations and everything in that sense. Now, it is going to be possible for more than one person to be deemed the preparer of a tax return. We did talk about that a little bit, thinking more so about big accounting firms. This occurs because anyone who prepares a substantial portion of a return can be treated as a preparer. Now, the IRC does not limit the number of preparers to just one person for a particular return. That's something to know. And we did talk about this, but it's reiterating again. Multiple individuals who each contribute to the preparation of the return or claim for a refund. Now, we keep mentioning claim for a refund. Yeah, if there's a separate portion of the return where you need to fill out a claim for a refund, that is also going to be, in addition to the preparation of the tax return, may be considered tax return preparers. Now, additionally, the final reviewer of a tax return is not automatically going to be considered the preparer. These are all different angles on the same topic about who is a tax return preparer. All these different scenarios, you just want to make sure you know them, because guess what? Multiple choice questions will for sure give you all these different scenarios and try to trick you into thinking someone is or is not a preparer when you want to make sure you get that question right. The determination of whether someone is actually a preparer depends on their involvement in the actual preparation of the return or the claim for a refund, not merely on their role in reviewing the final product. And lastly, it is not true that two individuals who have done the most work in preparing the return will be deemed to be only preparers. There's no specific number. It could be 15 people. It could be one person. It can't be 0 people. Someone's got to prepare it, right? But yeah, this is another common trick in multiple choice questions. They're trying to make you think that it's just the two individuals who've done the most work. That is not true. There's no specific number. And does relate to anyone who's prepared a substantial portion of the return, regardless of the number of other preparers. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.